Hello and welcome to American Mogul. Today we are going to discuss Planet Ponzi. Yeah? How the Federal Reserve, the government, Wall Street, and the RobinHood crowd are being lured in to an ever-increasing Ponzi scheme. Now, you have to understand first what is a Ponzi scheme, yeah? Basically, you bring investors in and you promise them big returns, yeah? And then you have them make a little bit money, yeah? And then those investors are happy they made, oh, look at this money I made. And then they tell their friends and their friends, and they get involved, and it's a little bit more deceptive than a pyramid scheme, but it is what it is. Yeah. So let's take a look at how long does a Ponzi scheme last, and what it is all about. Yeah, normally a Ponzi scheme lasts about 10 years. Yeah, and it requires more and more and more investors to keep it going, and the people at the top constantly skimming money. Yeah, until there are no more investors, there's no more money, and then the whole thing collapses upon itself. So let's look at what's happened since March of 2020. Yeah. In February, the market hit all-time high. Yeah. And then we had a situation that time with the market dropping. So market drops. Start at base. And what happened? Federal Reserve kicks out a new monetary stimulus plan. What happens? Government kicks off a new fiscal stimulus plan. And at the same time, you are having all these free commission brokers coming out to say, hey, you can trade whatever you like at no cost. Yeah, think about that. Back in the day, in the 70s, 80s, you had to pay 1.5% commission to buy and 1.5% commission to sell, depending on the size of your account. A little bit more, a little bit less, about around that. So it made your investment decision more difficult, because if you thought a stock was going to go up 2-3%, you couldn't make any money because you had to pay that in commission. But now, with commission-free trading, if you make 2-3% a week, hey, you can make 100 to 150% in a year. Yeah? But what happened in a Ponzi scheme? Ponzi scheme, people start making money, and they make not 100% in a year, not 100% in a month, not 100%, they can make 100% in a day. And that fever, that pitch, just encourages more people to come in and invest in the market. But let's have a look at the market, and we'll circle back. But I need you to understand that currently the U.S. stock market, total value of all stocks, is $51 trillion. Yeah? $51 trillion. Let that sink in a little bit. And why do I say let that sink into a bit? Because now I'm going to tell you what the total asset value of those companies are. So if you take all the companies that are market value 51 trillion, and what is their tangible intrinsic value, what you think it is? 2.3 trillion. 2.3 trillion. But how can the market be 51 trillion if the companies are worth 2.3 trillion? There's more. It gets more intriguing. Because those companies owe money. Yeah. They owe money. They have debt. What you think the sum of all the debt that those corporations have? $2 trillion. Yeah, $2 trillion. So if the assets on the balance sheet are 2.3 trillion and the debt, yeah, on the liabilities side is 2 trillion, then what is the net asset value or book value of all the corporations involved in the US stock market? 300 billion. Please hear me. 300 billion in tangible assets is the total value of all the corporations in the US stock markets. That's it. So you have 51 trillion market value based upon 300 billion in assets. Tangible assets. Saleable assets. Think, some people talk about a pyramid scheme, but invert the pyramid and the 300 billion is at the bottom. That's the book of value, yeah? And the top of the pyramid is 51 trillion dollars. So price to book, yeah, you heard that, price to book. The price of the stock market to the book value of the stock market is 180 times. 180 times. And, of course, the Ponzi schemers, the Fed, the government, Wall Street, and I would lump in my opinion, RobinHood, Webull, M1 Finance, and all those other institutions that give free, because nothing is free. There are charges like you can't imagine, but you don't see them because you only fixated on your account. And when you look at financial media, yeah, they're telling you this stock market, which is 180 times, yeah? Let me explain what 180 times the book value of the stock market. That's 18,000%. The stock market 18,000% over the book value of the underlying stocks. Well, how can it get that way? How can this market get that way? Well, these companies that you have to understand what a Ponzi scheme is. There's never one person involved in the Ponzi scheme, there are always multitudes of people involved. In this situation, you have the Federal Reserve. Now, think about Federal Reserve. It has tens of thousands of employees. Why does it need tens of thousands of employees around the world? I mean, you yourself could figure out and probably do a better job than these imbeciles in the Federal Reserve. You just go to the supermarket. Prices going up. Yeah. Talk to your friends. How many are unemployed? Yeah. Think about the housing market. Yeah. How is this possible? Because they are inflating the money supply. And when you inflate the money supply at these astronomical levels, it's going to have an effect on tangible assets. Yeah. Now let's look at stocks. Yeah. Because different from homes, where home and land are tangible assets, a stock is a myth. Yeah. Oh, listen to me. Most, if I would say 99% of all corporations in all the stock markets around the world, you are sold a piece of paper. Yeah, stock. And if you read that stock, because they don't give it out anymore, it's all held in trust somewhere because they don't want you to read it. Yeah. But if you read it, most of the corporations, those stocks have no voting rights. Yeah. Those stocks pay no dividend. Right? Because if you think the fallacy, yeah, the myth of I buy a stock, I'm part owner in the company, you're wrong. You are wrong. Because imagine you and I start a business and we are partners. Yeah. And you put your money in, right? Because I starting the business, you want to be my partner. You put money in. And I say, okay, I'm going to give you a piece of paper that says you are part owner. But that piece of paper says you can't decide on anything that I decide on, and you are not going to be given any of the profit that I make. Yeah. Think about it. If you're not making any money from the profit of the company you invest in, then you are not part owner. You are part of the pyramid, part of the Ponzi. Yeah. Think about all these companies, because what people are investing in is a pyramid Ponzi scheme. You are hoping, you live on hopium, that if you buy a stock for $10, you can sell it to someone else for $11. Yep. How does that work? When you are not given any profit, when you have no ownership rights, when you have no voting rights, but you don't care. And that's the problem with these markets. That's the problem with a pyramid scheme. That's a problem with a Ponzi scheme. That people don't care about what the underlying asset does as long as they can sell it to somebody else for more money. Yeah. It takes about 10 years, 8 to 10 years, for a Ponzi scheme to run its course. I would consider, yeah, if the underlying assets of the entire stock market, which is $300 billion, what would you pay for that? That's that ownership of 300 billion. Yeah. So let's say a book value, yeah, 300 billion. Would you pay 1 times, 2 times, 3 times book? I can't remember. When you how long will it take for that asset to build 2 times book, to build 3 times book? Yeah. I would say it takes 20 years for assets in a corporation, if managed properly, to double. Right? So, this is going to knock your socks off. So, if I'm investing in the stock market and the price to book of the stock market is 180 times the underlying asset, I would be good at 3 times. Yeah, 2 to 3 times. So that places the underlying asset at $1 trillion rounded. We round a little bit. So if the stock market at 51 trillion and I would value it at 1 trillion, that is a 98% loss from the top of the markets where we are right now. When that last person comes in and the next person says, Remember, there's always, you can never find that person, but there's always a person that says, woo, we're going to the moon. And then the next person that says, I don't think we are leaving orbit. Well, what happens when that happens? Market crashes. But when that happens, all the big institutions, all the big investors, nowadays with their algorithms and quants and all the research they can do, they know when that top is coming. So they don't sell at the top. They sell in the last 5-10% of that top. They start selling this stuff. And look around. Insiders have been selling their asses off for the last 3 months. But the market keep going up. Because a Ponzi scheme requires people to talk. Remember what I said? One investor goes in, make a little bit of money, decent money, and then he take his money and go talk to another investor. Now with social media and with commission-free trades, you are getting bombarded with buy. Look at this stock, pump and dump like there's no mañana. But what they don't tell you is how many people lost money. Yeah. Let's look recently. There was the short squeeze. Yeah. Which they'll make a movie, the big short squeeze, whatever they're going to call it. And how many people made money? Very few. Retail investors made money. How many institutions made more money? Woo! Woo! Insane amounts of money. And now who's losing money? The retail investor. It's a pump and dump. They get you excited to get into that pyramid, to get into that Ponzi, and then you are finished. It's happened from the beginning of any type of trading. Yeah. How many people back in the 16th century during the tulip bubble sold their house for a tulip bulb? What kind of mental idiocy do you think that... I don't even want to tell you, right? Because my mama said don't swear. Right? What I would say to you if you came up to me with a tulip bulb and said, you got to buy this. Or now it's a hash bulb or a marijuana bulb or an EV battery charger or EV. Go. Forget about it. Forget about it. People don't think. It's a giant Ponzi scheme. Encouraged and created by Federal Reserve, the government, and big institutions. Because they are making all the money. Just look at what the big financial institutions are making in profit from commission-free trading. How is it possible? How is it possible? Because you are the new crowd, yeah, the RobinHoodies, the Reddit bros, the Wall Street bet bros, the Weeble Wobblers, the M1 Finance, and all the other Schwab and Dobb people out there that are going to get fleeced. Yeah. Do you know what it means? You know, get fleeced, or the golden fleece. Yeah. Back ancient times, when they were searching for gold, mining for gold, they would tie down a ram, yeah, a sheep, and run all that crap over top of that sheep. And inside the wool, yeah, the gold would collect and all the other dirt will wash away. So then they would shave the ram, yeah, because the ram wool was denser than the female sheep, and burn it, and gold would be left behind. That's what it means to be fleeced, to take all your wealth, because gold was wealth back then. Yeah. Robinhood, M1 Finance, Weeble, Wobble, whatever it is. It's all set up to create this FOMO, yeah, a fear of missing out, and they get involved in social media and they push the YOLO, yeah, you only live once scenario, to say, go for it, baby, go for it. And what's left behind? Shattered lives. Yeah. Because you may not think so, but this margin investing should be illegal. You should only be allowed to invest what you have, but then the stock market won't go up so high. Yeah. If you curtail margin investing, which is immoral and illegal and leads to utter ruin, yeah, I have never, ever bought any asset on stock market with margin, because I only put money that I'm willing to lose, and I'm not willing to lose anything. Well, but when this market comes to that person that says, I want to pay for it at this price, and the market starts to go down, how many margin calls? How many people are going to be devastated? Because think, from what I understand, these commission-free platforms allow people with $10,000 to margin up to 100,000. This, well, if you do that, market has only one direction, but up. And more excitement you build, because this whole big short squeeze movie that's coming out to a theater near you when everything's reopened will show how many people got fleeced. How many people are going to be shattered and destroyed when this short squeeze, and then they'll find something else. Another bright and shiny object to dangle before these Robin imbeciles, these Reddit imbeciles, these Wall Street bet bros that think they are talking to each other, but they're talking to fund managers. They are talking to investors that are manipulating them. Now, not all of them are being treated this way. There are a lot of smart Robinhood investors. There are a lot of smart Webull investors. There are a lot of smart M1 Finance investors and other platforms that have commission-free trading. Yeah? But how long can they hold out from the Ponzi scheme that the Fed, that the government, that Wall Street, and that the media is pumping at you? I mean, you can only do so much. Yeah? You can only hold the line so long. And when you look at what is happening with a stock market, yeah, valued at 51 trillion, dangling over top a fulcrum, well, not a fulcrum, a point, yeah, in an inverted triangle of 300 billion intangible assets. It is completely irrational. But market probably gonna keep going up. And gonna keep going up until, like every other Ponzi scheme, like every other pyramid scheme, when that last investor, yeah, wants to sell and there's nobody else coming in. They are trying everything to get more and more and more and more people to pump up assets, to make the rich richer and the poor the illusion of getting better. Because bottom line, those stocks are only worth what you are willing to pay for, and when you sell what someone else is willing to pay you for them. Yeah, it's not based on any type of financial, business, economic modeling. That's a pure planet Ponzi, brought to you by your very courteous Fed, your very understanding government, your very gracious Wall Street. Yeah. And how you think that story gonna end? How do you think it's gonna end? When there are no more complete idiots to jump into a market that is 180 times its intrinsic book value. Be careful. This is not the time to run naked in the streets. That will come in the future. Yeah? Because when they come for a margin call, they're going to take everything you got and leave you naked in the middle of the street. Yeah? God bless you and keep you safe. Think about what you are doing.